Look, it's not clear it's a recession, but it's clear that the ISM is certainly headed to 50 or maybe just below, which is the ISM, the Institute of Supply Management Survey. Anything below 50 suggests that growth has stalled. Anything below 47 usually gives us a recession. No, and I've sent out a few warnings. I did the warning on Real Vision about this as well on the daily briefing last week, saying, listen, this is an ugly market. What I think is going on here is there are two factors for the market to digest. One is inflation, and that created the market to set up in certain ways. Everyone's crowded into certain themes. Then growth starts evaporating. You can see it all over the place, stuff like consumer discretionary stocks. You can see it in the forward-looking indicators. And so the market has to deal with inflation plus growth. And what that's basically mean is everyone's hit the liquidate button. So everything's getting liquidated. This is the correlation of one style markets that I was warning about. And it hits everything from crypto to pretty much everything. And the thing that stands above all ends up being the dollar, because that is the kind of safe haven. Dollar today's had a slightly different day. We've corrected some of the move, but we've seen some huge moves in the dollar, and I'm not sure it's entirely done yet. So there is a massive liquidation going on as people struggle with their portfolios, because basically whatever position you've got, it's wrong. And that's the pain everyone's going to have to take for a while.
Yeah, Dixie at 103, spot one right now as we have this conversation. Raoul, you've been thinking, writing, and talking about this for a long time. We've all been thinking about this at Real Vision. It ties into where we are actually going next week. Global recession, everyone is wrong, precisely to your point about how everything feels wrong right now. That's the title of the series we have coming up next week. Big picture, 50,000 foot level. You started to touch on inflation and growth. Where are we right now?
So I think we're at an inflection point, and a lot of people don't agree with me. So I wanted to go, that's why I did the campaign. It's like, listen, this is a really complicated macro environment, but it's very macro, right? We need to know and understand from the best people in the world what the hell is going on, because my voice is just my voice. My personal view is that we are doing the transition from inflation to growth. The next shoe to drop will be the inflation shoe. I think inflation and growth go lower, and we either head into recession. Europe looks like it's already in recession. China has been essentially in recession for a while now, but maybe coming out the other side early stage. And the US forward-looking indicators suggest, look, it's not clear it's a recession, but it's clear that the ISM is certainly headed to 50 or maybe just below, which is the ISM, the Institute of Supply Management Survey. Anything below 50 suggests that growth has stalled. Anything below 47 usually gives us a recession. So we're getting in the phase where we're going to have a very slow patch, and there is no sign yet that that's turning around. So it could accelerate lower. So the recession is potentially on the cards. It's certainly on the cards in Europe. And we need to figure out, what does this even mean? What does it mean? And I think the big thing it means is bond yields are coming lower, because the inflation narrative, I think, is about to change. In the content, week 2 of the content campaign, we have interviewed, I'm so lucky to be in the position I'm in, to be able to sit down with, ask Pierre Andran, the world's best oil trader, what's going on in the oil markets, and Dwight Anderson, probably the world's most famous commodity trader, what's going on in the commodity markets. And, their view is these kind of prices will lead to demand destruction. And I think that's what we're seeing. We're seeing commodities crowding out growth. And I'm also keeping an eye on crude oil to see how it trades. A lot of people have very bullish forecasts, but I'm worried that the demand situation is not quite as good. And if crude oil does break this pattern to the downside, and it's far to be proven yet, then the inflation narrative would disappear very quickly, because inflation expectations are basically driven by the oil price, bizarrely, as if that's not the only thing that drives inflation, but that's what drives inflation expectations. That would change the narrative a lot and drive the panic into bonds. So if you've got a falling equity market, falling growth, falling inflation, well, that drives everybody into the dollar and bonds. And, as people know, I love the dollar and bonds generally as a trade. That's the most macro trade of all.
Yeah. WTI has retreated about 1% on a price basis here on the day, trading now at 104 spot 28. Brent actually up a little over 1.5% on the day. Closing out looks like 109 spot 40 on Brent, the global price for oil.
Yeah, and for me, it's oil either needs to break above 110, which it tried to do, and maybe even a bit higher than that. Or if it breaks below 95, then I think it accelerates lower. So we're in a tight range. It's kind of, tenterhooks, which way it goes. If oil breaks higher, it's only going to increase the demand destruction and the squeeze on corporate balance sheets and the squeeze on households. So it's not a good setup here either way. We've either done the damage already or we're going to do some more damage. So these are very important markets, and this is a very macro environment, and it's very, very important to understand what it is.
Yeah.
Now, if I'm right, and that the inflation story is going to change and growth is going to go slower, then we start shifting into a dynamic where we question what the central bank's going to be doing, and if bond yields are going to come lower, stuff that's been really beaten up, like the further end of the growthy stocks, they should be more interesting in that environment because they got killed by inflation. I think gold does pretty well. It's, interesting enough, gold and growth stocks tend to do badly as real rates start tightening, but they got to zero and it looks like the world's falling apart, just as the central bank are trying to undertake quantitative tightening, or at least no QE. And if that's the case, then real rates are going negative again, if I'm right. And that's usually good for gold, crypto, long end of growth, that kind of stuff, and bad for everything that people have been in, like commodity stocks.